All right, so you want to trade like the big banks and institutions, or at least with them, and so you can catch these huge, gigantic moves like you can see on the screen right now, and take it all the way up to the moon. Well, I'm gonna teach you how to do that just like this. I'm gonna show y'all everything when it comes to order blocks, so then y'all can understand it, see how the big banks and institutions and smart money utilize them and how they use them in the overall basis. So then you can take trades just like this and capitalize off these huge moves very quickly. So then you have the rest of the day for yourself. So let's get straight to it. All right, so what you're going to learn in this video is what are order blocks, the overall basis, how to find them, and overall just the top three main rules in terms of them being valid order blocks and not BS or maybe even a demand zone, because you'll see in this video when it comes to charting them out, it's very similar to supply and demand, but an overall basis, not really to an extent. Y'all see eventually. So what are order blocks? Order blocks are areas of inefficiency and liquidity. Instead of price breaking through your regular low or breaking through your regular high to sweep liquidity, order blocks are in general zone that is going to be tons of liquidity, and amongst that also imbalance, which is why like what I showed earlier, and which I'll show in examples later on within the video, you see these huge drastic moves the moment it taps into it, because it's not just a regular demand zone. It's not just a retail trader support and resistance level. It's an area of liquidity and imbalance and just tons of buy and sell orders within them. So not only is it an area with tons of imbalance and liquidity, it is also an area where those big banks, institutions, and smart money have tons of buy orders or sell orders, depending on the overall direction the market is moving in. So that when price does come back to that area, it can move drastically in a said direction. To find order blocks, first, you need to find, just like a demand zone, you need to find a huge, drastic, impulsive candle and move overall. The moment you find that huge drastic candle, you want to make sure that there is a gap within it, is the second thing that you want to make sure that there's a gap within that area of that impulsiveness with the candle. And then third off, you want to make sure that there's break of structure, which break of structure is essentially, your highs, you're creating new highs and higher lows when you're in an uptrend, or lower highs and lower lows within the downtrend. You're constantly breaking the last lower low, or you're constantly breaking the new higher high. That is break of structure. And within here, we'll have two examples of how to overall find order blocks other than those few aspects, which are you will be able to find them in the moment with slight retracements, but you will also be able to find them more prominently within an overall market structure shift. All right, so let's get to the chart, show you a little overlay of what I mean with a couple of these things, and we'll get to a couple of replays and show y'all some examples of these trades. So as we can see here, we have an overall uptrend. Essentially, we're going up, boom, boom, boom. And usually within the lows, so the areas at all the way at the bottom, from where it goes from consolidation or maybe selling and moving upwards, or maybe we had a market structure shift that was going from selling and it started going from buying. Usually when price starts going up and starts dropping downwards and heading back down, which I'll show some examples because we had some stuff like that this week with a couple of trades that I put out. There's usually going to be an order block right down here at the low where it's going to tap into it, and then usually, not even usually for the most part, reject prominently and then just go completely haywire all the way to the moon. As we can see here, we have a gap in the middle, inefficiency, and we have an impulsive candle right here. All right, we also have one down here, and we also have one down here. All right, so we have three possible order blocks at the bottom. Now you'll find this a lot, conscious like the demand zones. It'll be a similar thing, and you might be like, oh well, which one is going to go to? Chances are price is most likely going to go to the first order block and not the other ones, because this would be an order block, these would be extreme order blocks, and price is more likely to go to the first one then break through and go to the other ones. And if it does break through and go to the other ones, usually it reacts to the first one first, does what it does, and then eventually breaks through it to get to the rest of them, ultimately sweeping even more liquidity, and et cetera, et cetera. All right. So we are in Euro USD. All right, we got the replay mode so we can see. Matter of fact, let me pause it real quick. So we can go to the other examples. Is right here. Not only did we have a breakup structure right there. All right. Not only do we have a breaker structure right there, as we can see here, we were selling a whole bunch, so we also had a market structure shift. Okay. And amongst that, not only do we have the breaker structure and the market structure shift, we also have the impulsive candle with the gap in the middle. Those are our three confluences that it's going to be a more valid order block. All right. Which then we can continue playing this. Obviously, price spikes down and boom, tap straight into it. Immediate rejection. Immediate rejection. All right. And you might think price might come back down again, but it doesn't. And it just continues up and continues up and continues up. Let's say you put your TP at that high just in case. Boom. And it just keeps on going upwards. That's what I mean by that huge impulsive move. You won't find that in most demand zones. You might get that occasionally, but they'll usually are news impacted. But with an order block, you are more likely to find moves just like this just about every single time. All right. Now, going into some other things. So, how to find out and see if the order block is actually going to work. Because you might have every other aspect and confluence that it's going to work, et cetera, et cetera. But there are a few other things that can happen that'll ultimately let you know that it won't work. All right. So, and then right after that, I'll talk about how when it comes to entering into these order blocks. All right. So first, we're going to talk about right here. All right. As we can see here, we had a huge impulsive candle, had a big bearish candle, and a big gap in there. So inefficiency and liquidity within that zone, obviously. And we also had a breaker structure, boom, right down there. All right. And then price eventually came up and tapped into it the first time, immediate rejection. Looks great, looks beautiful. But guess what that second candle does? It taps into it again. And then guess what the next candle does? It taps into it and keeps on going, and then eventually it breaks through, retests, and uses it for a reversed order block, you could say. And that would be called mitigation. When it taps into it more than once or spends a long time within that area of the order block is called mitigation. All right. We do not, for the most part, want price to mitigate that order block. Now, price will mitigate it sometimes. Occasionally, you'll see that a lot of order blocks, which I might put up some examples from my old trades, that it'll tap into it, but it'll tap into it again. And at that point, you just need to be diligent and react to price accordingly. All right. In this case, when it tapped into it and tapped into it again, this is when you need to wait and be like, okay, it should have just tapped into the zone the first time, which would have been this bullish candle right here. All right, which would have been that bullish candle right there. And then it should have just immediately went. It should not have tapped into the zone again, but it did. And because of that, that's what's going to lead you to your confluences of, okay, let's be patient and wait for the next couple of candles to see what it's going to do, because it should not have tapped into the zone again. It should have just tapped into it the first time and went, but it tapped into the zone and then tapped into it again right after touching it, which would have been that bullish one, and then tapping into it again with that bearish one right there. All right, so then you patiently waiting and reacting to price accordingly, because it didn't just tap it and go, it tapped and then tapped it again. You would have saw that there's still tons of buy side pressure that it broke through it. And in that case, you would have been like, oh, praise the Lord, I was listening and paid attention to the video, because I could have easily entered into a sell position immediately and boom, got stopped out. You know. Another aspect, which is kind of similar to demand zones again, is if it breaks through it. So in this case, not only did it mitigate it by tapping into it a second time after tapping into the zone the first time, which if it does that, you need to be patient and wait to see what the next couple of candles are going to do. Otherwise, you're more prone to get stopped out. But within that, it also broke through it. Boom, broke straight through it. So not only did it mitigate it and prove that, okay, it's most likely not going to work, it also broke through it, giving us more confluences that it's not going to work. Therefore, if anything, we should wait for a retest. So like right here, and enter into a buy position and maybe hold it to that high, you know, and put that stop loss up. Boom, and you held it up to that high and you got tapped out, and that's a 1 to 5 RR. Not bad. You know, you don't need a huge gigantic trade every single time. The point is to be consistent and profitable and consistent with your wins and not your losses, not consistent with how big your trades are. All right. But as we saw there, you could have done that in terms of, okay, obviously price isn't going to sell off of this order block as it should be, because it did everything that it should have done within every aspect, the impulsiveness, the gap, and the break of structure, but it mitigated it way too long, stayed within the zone way too much. It tapped into the zone a second time after tapping into it and giving it a rejection the first time within that bullish candle, letting us know that it's most likely not going to work. And because we are patient and we are going to wait, we saw that, hey, there's still buy side pressure and it's breaking through it. Thank the Lord that we didn't enter into a sell position right there, because we would have got screwed over. All right. And if anything, you could have capitalized off a small buy side move up here. Right here. All right, this is an overall example of a change in character. So as we can see here, we're pushing up, all right, forming those higher highs and higher lows. Boom, does this and then breaks it just like the diagram showed, tapped straight into it, and boom, pushed all the way back up. Now, within here, all right, you might be like, oh, well, it tapped into it a second time. This is a case of, like I mentioned, as long as you are diligent with and react to price accordingly, just because it does one of those two aspects that the order blocks can't do or shouldn't do in terms of if they're going to be valid or not, whether that's tapping into it again with that next candle or mitigating it or breaking through it, you just have to react to price accordingly. All right. In this case, it gave me that strong rejection, but also gave me a huge bullish candle. And maybe it did tap into it, but seeing that ultimately gives me enough confluence. Okay, even though it did what it shouldn't have done, we have the confluence to enter into a buy position. Probably would have got out after it broke that got in once it broke that candle's high, and then held this to the next area of interest, which could have been this order block right here. And if we can chart this out, because as we can see there, we have a gap, the impulsiveness, and the break right there. I'm sorry, no. the break right here. All right. And then boom, W trade. All right, you could have put your stop loss in the break even eventually right around there-ish. All right. Boom, make that a 1 to 10. All right. Then you could have put it even more break even at this low, at the low right here. All right. And that's a nice trade as well, right there. Boom, shmoney. And yeah, another thing when it comes to which order blocks are going to work or not, just again reacting to price accordingly, is right here. As we can see here, we had impulsiveness. Actually, no, we had two right here. And then, all right, so, and this will probably be one of the last few examples. This is an example of which one is price going to go to first, all right? And an example of what I mean when it should just tap into it and immediately go. So at this first one, as you can see here, price tapped into it, immediately went. All right. If you didn't enter immediately off that rejection or maybe down here-ish, then you probably would have got out once it broke that, like the candle body's high, stop loss right around there, and TP at the next area of interest. We'll just say right there. All right. Boom. 1, 2, 2, just under a 1 to 8 RR. All right. Or let's say, yeah, you try to equal high. You try to match the equal high. Boom. That's money right there. All right. But let's say you try to hold it for longer. All right. Boom. Eventually price breaks through it and it taps into the second one. Like I mentioned earlier, price is more likely to drop down to the extreme order blocks other than the first one after it's already utilized the first order block. In this case, it already utilized the first order block perfectly. It tapped into it and immediately went, didn't touch into it again, immediately went as it should. That would have been a beautiful trade, great entry, W. All right. And then eventually it breaks through it and then taps to the second one. Gave you a strong rejection, but obviously, guess what? Price tapped into it right there and then broke through it. This is a case where you just need to react accordingly. Obviously, price tapped into it first. All right, price did push up by that long wick, but it did tap into the zone first, meaning that you should be more patient and wait for the third candle or the next couple of candles before you enter into a buy position or look for something different. That's all that means. So when price, mitigates that order block or taps into it again after tapping into it the first time or breaks through it a little bit, you just need to react to price accordingly. If you react to price accordingly, aka price action, then you'll acknowledge the fact that, okay, this isn't going to work. It tapped into it. Sure, it's buying right now, but it did tap into it a second time, which it shouldn't do. So let's be patient. And you would have saw, boom, it just kept selling and it tapped into the last order block. So this one failed and tapped into this order block. And guess what? Huge buy side pressure, big buy side move all the way to this sell side order block over here-ish. All right. And it's really just like that. So obviously, as you can see, like I mentioned with that overall change of character, like I said, price is usually going to do. So in this case, it was going all the way up and it came all the way back down, just like I did in the diagram, tapped straight into it, immediately went back up and it tapped into the other order block, quite literally like I had my diagram played out, a new order block that was going to be made out, So order blocks do work. All right. Matter of fact, we are in replay mode, so let's look at what price did within these first couple of order blocks. Actually, all right. Let's see what price did within here first. All right. Am I able to speed this up? We'll do 3 times, and then price taps into it, boom, and then immediately went, and it broke through it, tapped into that one, and boom, immediately went all the way up to this supply zone. This order block, all the way up there eventually, and boom, tap straight into it, would have been green. So let's say you got into it again right here-ish, boom, TP right around there. All right, let's replay this one more time. Tap straight into it, booms, pushing up, pushing up, pushing up, pushing up, and eventually, boom, cracks your TP. W. And again, there's multiple areas where you could have put your stop loss in the break even. So minimize and reduce the risk possibly, So yeah, but that's order blocks. That's what order blocks are. That's how to find order blocks. That's how to understand and utilize. But yeah, that's order blocks. That's what order blocks are. Those are the aspects into order blocks to make sure that they are valid order blocks. And those are also the aspects within order blocks to make sure that they're actually going to work and that they're not going to fail. Fail in terms of it taps into it more than once the first time. So if it taps into it the first time and then taps into it again and mitigates it or breaks through it, those are going to be the areas where, okay, this order block might not work, but we're going to be patient, react to price accordingly. All right. That's what we're going to do. That's what you're supposed to do. We react to price accordingly, especially when it doesn't do what it looks like it's supposed to be or should be doing within a certain area. All right. And then ultimately 2 different aspects of where to find them, which can be an overall change of character or in the moment. So like right here within this trade, this sell side order block would be an in the moment order block compared to this order block all the way down there. It would be a complete change of character with that order block. Going from all the way up there and then coming all the way back down just to push all the way back up, But yeah, so hope y'all learned something in this video. You can like, subscribe, go to the gram, join Traders Club. All my students doing real good. I'll pull up a few examples. They took a beautiful trade. One of my students took a beautiful trade yesterday. Shout out to him. And yeah, that's all within my link tree and my bio. If you want to go check all that out, learn you something. Still got my hour and a half free session. And yeah, I'll see y'all.